So right now we'll be looking at candlestick analysis. All right, you can call it candlestick anatomy. Okay, so we'll be looking at how candlesticks are read. Now, yesterday we talked about looking at the market and basically everything you have to understand in the market, talking about the history and what has happened will only be interpreted by the candlesticks, all right? And the candlesticks are the same irrespective of the time frame you are looking at. So you may be looking at 1 minute time frame, 2 hours, 1 hour, daily, monthly time frame, but the representation of the candlestick is the same thing. The only difference is that for daily, what it means is that it takes a whole day for that candle to form. For 1 minute, it takes just 1 minute for the candle to form. For 15 minutes, it takes 15 minutes for a candle to form. That's the difference. That every candle is saying the same thing, whether you see it on a higher time frame or on a lower time frame. So we'll be looking at how to read candlestick, all right? How to trade using candlesticks. The Japanese candlesticks is made up of a fat region called the body and a thin line either above or below called the wick or shadow or exhaustion. Now, a candlestick has just these 4 characteristics. Call it 3 characteristics: the body, the wick, all right? And it is every candle has 4 characteristics rather. Every candle has 4 characteristics. That's the open of the candle, all right? The close, the high, and the low. So every candle has these 4 characteristics. Please note them: the open, the high, the low, and the close. Okay, so that is this what you are seeing here. OHLC means open, high, low, close. OHLC. The OHLC tells us all that is needed to know about a candlestick at a particular time frame. All right, at a particular time frame. Now you remember I mentioned that every candlestick represents the same thing, whether you are looking at it on a higher time frame or on a lower time frame. Okay. So we have the open. Now the open stands for the price value of the market when it opened using a particular time frame. The high is the highest point that price reached. What this simply tells us that at some point, the body of the candlestick actually got to that height before it was pushed down or rejected. Then we have the low. The low is the farthest depth the candle or price ever reached before it was rejected. The close is the price at which that particular candlestick ended at that time frame. The price at which a particular candlestick closed will be the opening price for the next candle. All right? The price at which a particular candle closed will be the opening for the next candle. So let's assume we are looking at 1 hour candle now, and the price closed at 8:59. Now, a new candle will be forming at 9 a.m. All right? 8:59, a candle closed, a 1 hour candle closed. Another one is opening at 9 a.m. So the same price at which the one that closed at 8:59, which is its closing, that same price will not be the opening for the one, the next candle, which is opening at 9 a.m. Okay? All right, so before, let me stop share now and go to the chart to show you what I'm really talking about. Let's see that on the chart. All right, so let me share my screen so that you can see. So I'm sharing my screen now. I want to show us the candlesticks we just looked at. So I want to show us on the chart so that you have a better understanding and actually appreciate candlesticks when you see them. So I'm going to make it very bold. Okay, so these are candlesticks. Now, for candlesticks, we have the bear candlestick and the bull candlestick. All right, so the bear is the buy, the bull is the bear is the sell, while the bull is the buy. All right, here on my chart, red represents sell, while green represents buy. Now, this color does not matter. Some persons uses white and black, uses green and yellow, different colors. But what you just need to understand is that which one is your sell and which one is your buy. Okay? All right, so I believe you can see my screen. Please, if you can see my screen, put in 111 on the chat box because I'm going to do some showing to Ross now about the open close. All right. 111 on the chat box. Okay, so thank you, Haruna. Thank you, Shibweze. Thank you, Bright Nation. All right, okay. At least I'm sure you can see my screen right now. All right, so these are the candlesticks. These are the candlesticks. So I want to show us something. Now, please listen. For a bear candlestick, the open is on top while the close is below. When I mean a bear candlestick, I mean the sell. All right, when I say bear candlestick, I mean the sell. So we'll be using this particular candle now. Okay, so I believe you can see the lines I just marked. Now, this is one candle. Now, because this is a bear candle, this top is the open. This top, which is the second candle. Okay. So I believe you can see the screen very well. So now we are looking at this candle. This is a sell candle, is a bear candle. I told you that a sell candle is a bear candle. So this is the open, this candle open here. Now, before this candle formed, this was the previous candle. Now, this is where the previous candle is a bull candle, which is a buy candle, and this is where it closed. It closed here and opened the next candle here. So when this candle opened, at the time, it went up to this level, but could not sustain it. The sellers pushed it down, and it came further down to this level, which is the low. They still did not close at the low. The buyers pushed it up again, and they pushed it to this level. So this becomes the close. So this level now is the close. This is the low. This is open. This is high. That's just how to appreciate a candle. It has the high, open, and low. Okay? High, open, and low. All right, so this is for a bear candle. So now let's look at a bull candle. Let's look at a bull candle. Okay. So now I'm going to take this guy. Okay. So this is the candle we are looking at, this bull candle. Now the difference here is that the previous candle was a bear candle, which is a sell candle. The open was at the top. But in this case, the open is at the bottom, because in buying, the price is going up. So it opens at the bottom and it's buy up. But it went this high, but could not sustain it before it came down, and it closed here. And you look at the next candle, which is the bear candle. This is where the bear candle opened, all right? And it's also closed at the bottom. So what is your take home? Your take home is for a bear, for the two candles, whether bear or bull, whether sell or buy, high is high, low is low, all right? The high remain high, the low remain low. Why? For the bear candle, the open is on top, while the close is at the bottom. Why? For the bull candle, the open is at the bottom, the close is on top. So this is simple candlestick anatomy. All right, this is a simple candlestick anatomy. All right, so this is now, when we talk, this is anatomy. Now, anatomy is just understanding the candlestick and know how it is, okay? Now, talking about candlestick analysis. Now, candlestick analysis is actually a combination of candlesticks you are looking at to actually make a decision, to see what has happened in the past, to make a decision of whether the price is going to go up or going to go down, all right? So what we have done is candlestick anatomy, and candlestick analysis is actually intermediate. But when we'll be going for strategy, I will show us, I will give us a little bit of, we'll do support and resistance and all of that. You will see candlestick analysis on that. So we'll be doing support and resistance today. We're not even going to wait for strategy. So when we're doing candlestick support and resistance, you see what we'll be looking at, you know, talking about candlestick analysis. So for candlestick anatomy, we're going to be ending it here. So I will stop the recording so that you ask questions then before we go to the next topic.